Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual. Learn how professionals trade the penny stock market, available on our site at trading-pennies.com. This week's chart is Medizone International Inc, ticker symbol MZEI, a decontamination and research and development company within the healthcare sector. What caught our attention in this stock was the cup and handle pattern that was forming in the stock within the recently uptrending healthcare sector. As noted in our manual, cup and handle patterns are one of the most profitable and predictable patterns to trade, and seeing this forming in Medizone International Inc. placed it on our watch list of potential breakout stocks. In review, a cup and handle pattern is formed from a prior breakout. The high of the breakout forms the left side rim of the cup. As the stock pulls back, it forms the left side of the cup. During this period, it is likely that there will be increased volatility, both greater range among highs and lows and volume, in whatever time frame you trade. As volatility decreases, the stock begins to form a base. It is important that the lows of the base do not exceed 50% of the prior breakout range from the low to the high that formed the left side rim of the cup. A break of this increases the likelihood of failure of the pattern. The right side of the cup is formed by a gradual increase in price that does so on lower volatility and volume. The rim of the right side of the cup is formed slightly below, at, or slightly above the high that formed the left side. From here we look for the formation of a handle. A proper handle is formed when the stock pulls back on lighter volume and decreasing volatility, and the low of the handle does not exceed 50% retracement of the low of the cup's base to the handle's high. With this in mind, our buy-in point will be a break of the handle high on accompanying significant volume during a period of the day which is not subject to head fakes. If you have questions, please refer to our manual. As can be seen on the daily chart, the handle high was broken on November 2nd. As confirmation, one always wants to see volume accompany this buy-in point. As can be seen on the intraday chart, a volume spike accompanied the breakout of the handle going into the close, and where we took our original position. Once in a position, our attentions quickly turn to exit strategies. As noted in our manual, a profit is only realized should you sell your position at a higher level than which you entered. As noted in our manual, professional traders look for convergent points amongst the various chart patterns not in single time frames, but simultaneously in multiple time frames as professionals think three-dimensionally, anticipating truly significant key pivot points in which to both enter and exit positions. It is at these key pivot points where the greatest volume of traders waiting to take action will be greatest, and points where market psychology is more apt to suddenly shift, and as such, the trend in one's position. Thus, as the stock moves into these key pivot points, we closely watch the price volume action, letting it, not what we project onto the markets, dictate our trading decisions. On the monthly period chart, we looked at the consolidation price projection target at the 0.22 price level. As noted in our manual, a consolidation forms when a stock's price movement trades between a range of two established boundaries, whether they be trend lines, price points, etc., after a directional movement in the stock's price, whether that be a previous advance or a breakdown. Consolidations visually take on the appearance of either a pennant, which looks like a triangle, or a flag which resembles a square or a rectangle and can form within any time frame. The slope of the triangle or flag can be level or have an upward or downward appearance. As a general rule, downward sloping flags and upward sloping pennants are considered bullish, while upward sloping flags and downward sloping pennants are considered bearish. Flat or level flags and pennants are generally considered bullish or bearish depending on the trend that immediately precedes their formation, and therefore are considered continuation patterns. As can be seen on the monthly period chart, MZEI formed a bull flag consolidation. The development of a pattern over the time in which it develops tends to project into the future its target price. In the case of a consolidation pattern, if one takes the range between the low and the high of the previous breakout and adds that range to the low of the pullback of the consolidation, the high that is projected predicts the next future target and a good place to consider taking profits, as this is now a new key pivot point. Thus, on the monthly period chart, the 0.22 price level represents a key pivot point to consider taking action, depending on the price volume action at the time. The weekly period chart demonstrates a similar consolidation price projection target of a 0.22 price level, but more importantly, shares a convergence point with an uptrend line drawn across the highs of prior trading. Convergence among patterns at price levels give these price levels greater strength as key pivot points, and to have these converge with price points amongst the different time frames only gives these key pivot points greater strength, and in the case of MZEI, the 0.22 price level represents a key pivot point of potential resistance. On the daily chart, we see the consolidation projection target of the cup and handle breakout pattern. If one takes the range between the low and the high of the previous breakout, and adds that range to the low of the cup, the high of that range predicts the next future target and a good place to consider taking profits. In the case of MZEI, the projected target is at the 0.24 price level. The intraday chart demonstrates a breakout consolidation target at the 0.20 price level. As can be seen, the first of the target projection points was reached on November 4th. We decided to take partial profit here for a number of reasons. The internals of the general market over the past couple of days were breaking down, and the number of distribution days of the S&P suggested a market in correction, a good time to be in cash. The second was a convergence between the consolidation projection target and the natural psychological resistance of the 0.2 price level. We held onto the remainder of our shares, anticipating a pullback to the breakout point at the 0.14 price level. If this breached the low of the handle, in other words, the 0.12 price level, we would exit the remainder of our position. Volume support came into the stock as it rebounded off of the handle low at the 0.12 price level, and where we added to our position as it closed above the handle high breakout in late afternoon trading. The stock gapped higher the following morning on good volume on opening trade, and the gap was never filled. We quickly looked at the current intraday consolidation projection target to be the 0.27 price level, should the 0.20 price level be breached on significant volume. We use the support of the intraday 200 period moving average as our line in the sand, and if breached on significant volume or two successful closes of the 3-minute period candle, we would exit our entire position. During afternoon trading, MZEI broke above the 0.20 key pivot point on good volume and closed above the intraday 200 period moving average, so we held onto our position going into the close. On the open of November 11th, MZEI gapped above our key pivot point of 0.22 discussed earlier. We reduced our position by half and used the intraday 200 period moving average as our stop loss point for the remainder of our position. Volume came into the stock as the 200 period moving average and the 0.20 key pivot point served as support, and the stock vaulted to the 0.28 price level in late afternoon trade. We exited the remainder of our position at the 0.27 price level as it moved into the upper boundary of an uptrend line, and the stock we viewed was a little extended above the support of the daily 8 and 20 period moving averages, both of which are key moving averages to the majority of short-term traders. Our suspicions were confirmed on opening trade as there was a volume break of the intraday support of the 200 period moving average going into the close. 200 period moving average, my apologies. Where MZEI goes from here is anyone's guess. To the upside, we would want to see a volume break of the current resistance at the 0.28 price level. To the downside, we are actively watching the price volume action at the 0.14 to 0.15 price level, as this represents a major support. Until next week, from TradingPennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.